Hey guys, guess what?
What?
Good.
Live. Oh, like almost. How are you guys doing?
I'm good, man. We hanging in there, I'm on that newborn life, so, huh?
It's been a week of cousins. It's like all week just filled with cousins.
Yeah.
That's a similar cookout.
We've had quite the week, y'all. We had the cookout, then we had Wednesday, and then on top of that, we also have today, and then we also had spaces today. I mean,
what's up,
Lord. And there's nothing happening tomorrow, right? Yeah.
No.
Oh, okay.
Okay. Going 3 days back to back. That's intense.
So intense. But anyways, what's good, y'all? I am Mark Monroe, and I am accompanied by the wonderful
Jolene GC in the place to be. And we have a guest today.
Oh, we do. And who is our wonderful guest? None other than First Gen Wealth himself. Yep, that is right, Mr. Zay. So what's good, brother? How you doing? Yo, I need to get all comfortable over here.
Yeah, I'm comfortable. Hey, look. Hoodie game, man. I feel you. We out here.
Yo, we all doing this. We're doing hoodies and like cream colors and everything else. I'm all here for it. Like, yo, let's go. So Jolene, guess who's the first person here today?
I already know because I look, what's up, Reggie? How you doing? I was already in the mode. Like normally you do that like right away. So I was already like in the mode. So
the deception. All right, well, it's okay.
People are upset with Reggie though. They're like, what? How is he getting the notification so quick?
Hey, Reggie got the he not only did like the sometimes, he did the all bell. So shout outs to you, Reggie.
Yo, it's hard to like be first. Like I'll be clicking the refresh button every 2 seconds trying to be first. So it's a race.
Hey. We ain't gonna do that today. Nope. All right, what's good, everybody? What's up, everybody? This is Lord. Clearly.
Letter's not having it.
Letter's not having it. He's regulating.
That kind of Thursday.
It's that kind of Thursday. He's like, look, y'all, I'm tired. Hey, you're done. Come here. Come on. You're done. You're done.
Is he talking back?
Lay down. Thank you. All right. So
I want to know where these cousins are coming in from as more and more come. Shout your city out, y'all. Let me see who's in the building.
Gotta shout out DMV.
DMV, okay.
DMV strong.
My child over here doesn't want me to be great. Oh Lord. Anyways, all right, what's good, everybody? We're gonna try this one more time. This is Hot Take Thursday. And on top of that, if you haven't subscribed yet, anything can happen. Clearly, Butter is in his feelings right now, but hit the subscribe button. And on top of that, if you like the video or if you like what we do, go ahead and hit the like. If you always believe that there's room for improvement, that's okay. Hit the dislike button, and please tell us exactly how is it that we can get better. And if you want to be like cousin Reggie, where it's like, yo, he's like in the know, like for real, like always the first one, then go ahead and hit that bell. So that way you can be a part of the notification squad, AKA the Cool Kids Club. All right, so without further ado, we've already said our salutations and greetings. But Jolene, how did this market do this week though? Or today, I should say.
Well, first, hold on, before we get into all that, we got London in the building.
Wait, for real?
Yes, London, Hollywood, San Diego, Brooklyn, the Bronx, Alabama, LA, Cali. We got DMV a few times, Chicago, someone's at Gold's Gym, hilarious, ATL, Macon, Georgia, Virginia, Columbia, South Carolina, New Jersey, San Diego, Vegas, baby, Orlando, Florida, Bermuda. Y'all are in here.
Somebody said Cuba.
Somebody said also Motown also.
Okay, we got Toronto checking in. What's up?
Oh, we also have India in the building.
Hey, India and Peru.
Okay. Shout outs to you, Amit from India. We know we're like our team Amit from our teammate Amit from India from Red Eye Studio. He's watching in.
Amit, you're missed. I miss you.
Yes. So we gotta it lets you guys know exactly how global we really are in the perspective of how many cousins you actually have around the world. Imagine that kind of network. All right. So, Jolene,
let's get into what happened today. Let's just get into it because
it's like a novella.
Yo, it's up, it's down, and then it kind of creeps to an up at the end, slight reversal of today's losses earlier this morning, but whatever, we're gonna count it all joy at this point. I don't even know what else to do. We just have to count it all joy. But the Dow was up 199.42 points. S&P 500 was up 20.38 points. The NASDAQ was up 15.79 points. And the VIX is starting to coming on down at 19.81 points. Now, let's get into some sector performance. As you know, we like to track these 11 sectors, or rather, we look at all the 11 sectors, but we talk about the top 3 and the bottom 3 so y'all can see like what this sector rotation is looking like. So here we go again, y'all. We got financials, industrials, and materials coming in at the top 3. And the bottom 3, we have energy, technology, and communication services. Those are the bottom 3. So that's really interesting to see tech and energy down there at the bottom. So for pick performance, you can find all of the Come Up Series picks, aka SIPs, at that Come Up Series on Instagram. There's like 37 of them, I believe. There's about 37 of them, but you got to keep up because you never know when they're going to change. So we got SDGR, we have Boeing, and we have C Limited. So those are the top 3. Then the bottom 3, we have Nike, which Nike was all in the news today, Netflix, and Datadog. Those are our bottom 3. Zay, how did you do in the market today? What was going on with you?
Man, right now, how did I do? Honestly, I'm in long-term position. So for me, it was probably a pretty flat day. I guess SMH was ARC was Apple so it was one of those kind of days.
Same.
Tesla.
I mean, there was actually some news that came out about Tesla, like some very sneaky news that came out at the very, very end.
Well, we definitely need to get into it because there is a lot of different. I mean, we got Elon, in his anti-union tweets. We have the all access. I don't know how I feel about this, but the all access supercharging stations. I don't know about that because it's kind of like, am I supposed to wait in line for you? No, just kidding. But anyway, let's get into these questions that the cousins have, and then also, I didn't get any other announcements. So if you all do have some announcements, the two of you.
Let me do a shout out to Mark because JP Morgan was up today. 1.28%, and Goldman Sachs was only up 0.5%.
Huh. So, about that though.
Yeah. Here goes one. I got you, Mark. What do you think about the banks not being able to buy back and increase their dividend until June 30th?
I like that. I like that. But it doesn't mean that you won't see tech not buying back their stock. So, what can I say?
All right, are y'all ready for these questions?
Oh, of course.
Let's go.
Now, I have to give him some credit though, because Zay actually called yesterday's bottom at. He said that we would be at 12.9 in the Nasdaq, and sure enough, he said it for the end of the week. But I said, it could probably happen by the end of the day, and sure enough, it actually happened. So.
Now we just need to defend it, okay? Like, don't go no lower.
I got some surprises.
All right.
Go ahead, Jolene.
All right, so we have this.
Wait. Did we do Black History?
Oh my God!
Oh, yo, I was waiting for that too. I was like, wait, we just skipped over it.
Brian, forgive me.
Oh, good.
I'm just slightly out of sorts today. I've been listening to gospel music all day, so I'm like floating in the clouds somewhere right now, y'all.
Hey, nothing wrong with that.
Okay, so here we go. Black History. Shout out to Brian Clyette, our historian cousin. We see you, brother. All right, so this is the Black First Edition. So we have Madam C.J. Walker. She created specialized hair products for African American hair care and was one of the first African American women to, or actually American period, women to become a self-made millionaire. The wealthiest Black woman of our time may be Oprah Winfrey, but actually Oprah just got knocked. If we're only talking about the US, then no. But if we're talking about globally, then we already talked about who was in that #1 spot.
Yep.
But 150 years ago, during the Civil War era, the wealthiest Black woman was Madam C.J. Walker. She was born in 1867, right after the Emancipation Proclamation. So who was she? She invented a line of African-American hair products after suffering from a scalp ailment that resulted in her own hair loss. She promoted her products by traveling around the country giving lectures, demonstrations, and eventually established Madam C.J. Walker laboratories to manufacture cosmetics and train sales beauticians. Her business acumen led her to be one of the first American women to become a self-made millionaire. You know that a lot of her like business models are used today in direct sales and like network marketing. So that's pretty dope. Now here's a quote from her. "I had to make my own living and my own opportunity." That sounds so familiar, but I made it. Don't sit down and wait for the opportunities to come. Get up and make them. All right, so up next, we got Jeremiah G. Hamilton. He was the first Black millionaire of Wall Street. Born in Haiti, shout out to Haiti if you were in the chat, rep right now. And what's really cool, he was born in 1807. Anytime I hear about someone being born in the 1800s, it's just like, what was going on during that time? Like, man, you just think about the context of that. Jeremiah G. Hamilton was the only African-American broker on Wall Street and the only Black millionaire in mid-19th century New York. At the time, Black intellectuals disparaged his relentless pursuit of wealth as crass and undignified. American historians would also shun Jeremiah Hamilton, ignoring his prominence in Wall Street during the 1840s and 50s. Today, he is all but forgotten, but not on this day. On today, we are remembering this brother. Yet in his lifetime, Jeremiah Hamilton was larger than life. Anything but a reticent figure lost in the background. Indeed, he left a pretty hefty footprint on the historical record. There are tens of thousands of words of newsprint about him, and in the archives, well over 50 court cases involving Hamilton as either plaintiff or defendant. His life provides a unique and illuminating insight into Black life in New York before and during the Civil War. The story of Jeremiah Hamilton's life disrupts the tidy view that the financial powerhouse of Wall Street was quintessentially white, totally segregated from the African-American past. When Hamilton died in May 1875, obituaries called him the richest Black man in the United States, possessing a fortune of $2 million or in excess of $250 million today. Here's a quote. "There is no known image of Hamilton, not an oil painting, a sketch, not even a photograph. He almost certainly did have photographs taken and quite likely commissioned a painting. But if any likenesses have survived, they are probably cataloged under miscellaneous or as subject unknown." That's not his quote, that's a quote about him. So that's really interesting. This is part of the reason why I started doing contemporary portraiture art, Mark. I don't know if you knew that, but it was because of the lack of portraiture of Black people. So
gotcha. That's dope.
All right, that was our Black history facts. Y'all keep me straight, you know, keep me honest here. Keep me honest. All right, you guys ready?
Let's do it.
All right, ever since I changed my password after it being, you know, permanently on live, like now it takes me forever to get into it because I always have to remember what it is.
You gotta like start building up the muscle memory for the new password.
Because my fingers just automatically, you know. All right, so here we go. Like I was saying earlier, Microsoft and Discord. What does this do to the Microsoft stock price in the short term?
Wait, what? Say that one more time. I'm sorry.
Microsoft and Discord. What does this do to the Microsoft stock price in the short term? I'm talking about the acquisition.
Short term, essentially, whenever you see a company that's acquiring, it kind of takes a bump. I think that given that this correction is a perfect time, I think it was honestly perfect timing for Microsoft in the sense that, you know, hey, you let everybody know that you're making such an acquisition around the same time that the stock was going to be going down anyways. And so essentially, like, you know, you can probably get some of that price action in for investors pricing in the fact that, okay, hey, this is going to be a $10 billion hit to Microsoft's cash balance. But in the grand scheme of things, I think that since we're coming out of correction, I think that they're going to just hit it at an opportune time. And ultimately, this is a good move by Microsoft for sure. If they already have Microsoft Teams on the enterprise and small business side, now it's like they kind of brought some of that technology in the messaging portion, which was highly lacking, I think, across the gaming sphere, especially for Xbox. You just brought that in for through Discord, and on top of that for other platforms as well. So if they're thinking about possibly coming out with a potential competitor to Twitch, this game gets a little bit more interesting.
You take a little sip because I need to go.
Hey Mark, is it ironic that it's this Discord is 10 billion and the Jedi contract was 10 billion and Amazon's battling them for that contract?
I mean, it's very coincidental, but I would probably say that they're definitely not that connected. I think that they were looking at the true valuation of Discord. And I mean, honestly, Discord brings in a lot of revenue. I mean, I'm probably sure that there's a lot of investment groups out there that use Discord and, many different other systems. So essentially, when you think about that revenue that comes through, I mean, that's pretty dope, Zay. Like, it's pretty ingenious. And then the part on the Cloud Jedi contract, I think that's going to take time to work itself out. But yeah, I think that's just pure coincidence.
All right.
I'm laughing at these comments. We got folks now, I guess, acting right at work. Before, they were getting ready to walk out. Now they're quiet. They're quiet now.
It's just more so in the sense that it's good that you're going through this period of time to weather your expectations. I think that this is good, especially as you prepare for the walk away. I think that you could probably attest to this also, Jolene, when you were going through that process as well. As a beginning investor, it's like, okay, hey, these are the things that you must experience, so that way when you have gone through this process, you kind of like know what to expect. So then essentially it's like you kind of become highly desensitized to it.
Yeah, and honestly, like, if I didn't go through that then, I wouldn't be so calm now. And let me just say, it's way better to go through that with a little bit of money, so you can get all that emotion out. Because then when you have a lot of money and you looking at these numbers, it's just like, dang, how much did I lose today?
You're like, oh, you got money.
So y'all, it's all preparation. It's all preparation for your walk away and for a tremendous amount of wealth. It is all preparation. So just take this time in stride, and breathe.
I mean, sometimes that's what it's going to take. I mean, there's some things that you just can't do where it's just like, you can't really it's no good to really just beat yourself up about it, because that gets you nowhere. The only thing that you can do at this point in time is really just, say, okay, hey, this is where I'm at. And pretty much, does my thesis still hold intact for the company? And of course, it's like, you're just going to have to stomach this, especially like, you're going to go through periods of bad months. But yet at the same token, it's like one bad month or a month and a half, that's 45 days. If we put that into perspective altogether, if we really look at it in the totality, versus being in a position for whether it's 360 days left or 700 and some change days. I mean, just a small blip on the screen.
Yes, indeed. Okay, so as you all know, that Zay is the cousin with the charts. So even though normally on Thursdays, we mainly go over fundamentals, we got to switch it up because we really need to keep y'all on your toes. So we will be getting into some technicals on a Tuesday. So just giving you the heads up about that. Yes. But okay, so we talked a little bit about Nike already, and there were a few questions about that. I don't know if we should save this for later. We're gonna save that one for later. Okay. We don't want to get all into the shade like too early. You know what I mean?
No, I stay ready.
So one of the cousins, this is very general, but one of the cousins wants to know, he or she, looks like it's a guy, wants to know, or hear you talk about about ARK-K.
Yep.
As far as the options go, because we have been seeing some serious dippage going on. So they want to talk more about that. I will say it's a good time to get into it if you're not already into it, and if you are in it, then you're just gonna have to hold on.
Yeah, I mean, you just kind of like nailed it on the head. It's like, a lot of the things that's really been impacting ARK is the same companies in which that we expect to have a phenomenal second half, or really like, 3/4 of the year. When you look at it, and I'm probably sure that we'll get into it a little bit with one of the top companies in that ARK ETF. But then you also have Square, which is expected to do pretty phenomenal, especially when we look towards the later part of the year. And I'll let Zay tell his prediction in a second, because it's a very, very good prediction. And, interesting, I could be on good authority and confirm some things, but I won't. Because someone just gives a hard time.
They got that big water.
Huh?
I said they got that big water bottle.
I know, right?
Gotta stay.
All right. So, but yeah, you got Square, you got Teladoc, you got Zoom, and many of these other companies that are there, along with Invitae and a lot of your other genomics. And then on top of that, you're going to also have your space that will also be included into ARK as the year keeps going on. So honestly, I have no fears when it comes to ARK and being able to easily recover as these other companies will recover. And remember what Dan said, he was like, he sees upside for a lot of the tech sector or a lot of the tech companies by 30%. I mean, that's including some of those same companies that sit within that ARK ETF. And so a lot of them are just sitting there and waiting. And honestly, if you think that the S&P 500, and in order for his thesis to work, right, if we think about the thesis of NASDAQ to 16,000, or even just on the, slightly base case, which is about 15,000 in the NASDAQ, that's not going to happen from the current companies that are there. And then on top of that, if we're looking at a price target of 4,300 to 4,500 in the S&P 500, we're seeing right now that the current companies that are like doing well, they're not going to get the S&P 500 to that 4,500 price target. So essentially, you're going to have to rely on tech to wake up. But I will pass it over to Zay as it pertains to one of his bold predictions on a company that's within ARK
Square.
Wait, let me get the time. Let me get the timestamp.
We're going to check this timestamp. So Zay, this is the first ever non-marked timestamp.
No, don't do me like that. All right. I mean, we talked about it earlier. If you was on Twitter Spaces, then you already know, and shout out to Q for this one, but it's only a matter of time before Square goes into the S&P 500. And when you think about the effect that will have on ARK, I'm not worried about ARK. Like, ARK's gonna do fine. And then Tesla to back it up. So here's something. Remember last year, Roku was running it, and it was Tesla. This year, it's gonna be Square and Tesla that's gonna be running ARK.
Okay, you heard it here first. That was that.
So are we projecting that Square will be in the S&P 500 or will be invited to the S&P 500 this year?
By September.
Okay, the time is 5:23 p.m. on a Hot Take Thursday. You heard it here first. Well, you didn't hear it here first, unless you were in Twitter Spaces, but.
Well, no, you actually got the time. Like he actually
so he said September.
Documented.
By September. All right.
Let's go, Square.
All right, y'all.
If not, I'm gonna have the Tyra Banks GIF image like loaded up. We were rooting for you. We're all rooting for you.
Listen, what'd you say earlier? If Etsy can go in the S&P 500.
No, see it right there. Jolene, let's move on to the next question because I want to hear more of my words.
All right, so here is a question. Why are institutions still selling off good tech at this point with it so cheap? Are they losing money?
No, they're actually taking profit. They're taking profit and ultimately like getting prepared to report quarters. I mean, pretty soon it's only a matter of time until we start seeing those new reports hit whale wisdom. So that way you can see exactly what those institutional fund managers or money managers were doing during this past quarter. So honestly, they're literally just taking profit and getting the performance. Because remember, and I kind of alluded to this on multiple occasions, a lot of your institutional money, they're judged based upon the benchmark of the S&P 500. Mm-hmm. So a lot of managers probably last year that were uber conservative, they got crushed last year. Like if you were a money manager or an institutional investor and you didn't take part in any part of the rally, or if the S&P 500 like literally skyrocketed, let's say by 60% last year, and you probably only brought in maybe about maybe 20%, you got crushed. You got crushed. And so this year, I mean, of course, this is a completely new year because of the fact that now you see, you know, they are kind of like, you're actually feeling their presence in the room, whereas last year they weren't really in the room. So now retail investors are now starting to get to know who those institutional investors are, how they move, and honestly what they're looking at. So essentially they've taken their profits from a lot of the tech, because by the time when they got in, tech was already running hot. So essentially they take profit, and I'm probably sure that retail investors did the same thing. They took profit, and then essentially now they move money from one side to the other, which you move from tech, you got to go somewhere else to ultimately be defensive as tech starts to drop. And then now it's like, okay, hey, we've reached, you know, there's a lot of companies that are sitting there at 25, 30% up for the year, and it's only March. So that's a very, very telling situation that essentially, and then looking at the S&P 500, saying, okay, hey, can we get there in this benchmark? And if the answer is no, then pretty soon they're going to have to move out of those same sectors in which that they've been able to find significant returns and performance, and then go to the next place, which is ready to just go for a nice marathon type of a sprint pretty soon. And that's ultimately back into tech, communication, and consumer discretionary.
Yo, oops, my bad. Cousin Kathy was talking about that benchmark and how that's kind of like the bondage that she doesn't have to be bothered with. So
yeah, I mean, it's kind of interesting because if you work at from any institution, and if you're not able to keep up with that benchmark of the S&P 500, you're out of a job. Like, it's that cutthroat when we look at it from the institutional money side.
That is tough. Okay. Let me see. Okay, so Zay, you had mentioned this earlier about the bank buybacks, that restriction. So the question is, well, this is not really framed as a question, but it's like the Fed's allowing banks to begin buybacks on June 30th. And how will that impact sector rotations?
Oh, is this for me or is this for Zay? I thought this was
whoever wants to comment. I'm saying that Zay brought it
Zay,
up.
take it.
I'm sorry, what was that one more time? I was looking at the comments.
Yeah. The Fed's allowing banks to begin buybacks on June 30th, and how will that impact sector rotations?
All right, so if you look at seasonality for banks, at least, and if you just look at the charts, like honestly, I'm big on Goldman Sachs and JP Morgan, but they've ran hot. I mean, they are up 20 to 35% on the year so far. And they got a big boost early because of the whole announcement on that they will be able to do their buybacks. Now it's getting delayed till the summer. They have to pass another stress test, so it could get delayed till September if things don't pick up. So it's not really a done deal yet. So if you read further into the whole them being able to buy back and increase dividends, there are certain tests that certain banks have to pass, and Wells Fargo didn't pass last time. So it's not necessarily a guarantee. So what I would say is this is the period where if we see interest rates start to cool off because the 10-year has slowed down, we could see banks just kind of start to consolidate because of the big run that they've had. And with them pretty much consolidating and you getting all the growth you could get out of them, it's like, where do you get the rest of your growth for the rest of the year? So hence Mark's point, you got to come back to tech.
We'll be waiting
patiently.
Yes. All right. So how's Intel's Foundry business going to affect Taiwan Semiconductor? Shout out to Tebow.
So I don't think that it will have that significant of an impact on Taiwanese Semiconductor. I think that they're positioned very, very well. And I think that honestly, as much as we want to get into the shade of things, the shade of it all, if we really put it into perspective, though that Intel is trying to pay $20 billion towards an Arizona factory or increase their manufacturing, let's kind of put it into perspective, shall we? So when we're looking at Intel, the reason why they're doing this purchase of expansion, is to keep up with the competition that is also quite ahead of them. And when we look at that, I mean, you know, honestly, that 7 nanometer process means a lot. I mean, and especially now that we're going into 5 nanometer as well as 3 nanometer. So, I mean, if you get the chance to check that out. And so when we look at it, Taiwanese Semiconductor controls, I think it's 55% of the entire market when it comes to manufacturing. And then, of course, you got the other players in the room like Samsung and a few other foundries. Now, and it's kind of interesting, hence the reason why you see some of the other manufacturers out there doing their thing, like Lam Research, ASML, Applied Materials, and TSM. They've been performing very, very well. So when looking at it, though, and which is very, very interesting, is the fact that, don't forget, AMD is making a $35 billion acquisition of a company called Xilinx. That is significant. That is very, very significant. Now, here's another stat to keep into mind. If you get the chance, go look up how many locations does Xilinx have as it pertains to its manufacturing. That will be a very, very telling story. Now, here's another thing to keep in mind. When you look at TSM, its number one customer is Apple. Remember, Intel lost Apple's business when Apple started making its own SoC chip. And then on top of that, its number two customer is AMD. So the question is, can we use this as a ploy to say, okay, hey, we're working on our foundry and making it better, improving the process so that way we can take in more capacity, so that way we could possibly lure in like the likes of Apple. But here's the other problem to it, and this is no shade, but at the same token, okay, it's shade, but when we put it into perspective, looking at Intel, you're not going to gain back Apple's business because of the fact that Apple likes its profit margins. And TSM does a very good job because of the fact that the cost is so low to keep those profit margins either in check, or to also, as things ultimately improve, it allows them to scale up. With an Intel, where's the opportunity there for the likes of companies like Apple and many other companies like it to literally buy into the Intel Foundry system and to say, okay, hey, we're going to go with Intel, when they're not even up to snuff when it comes to the die process. Remember that 7 nanometer, but now they're going into 5 and 3. And I think the SoC chip for actually Apple is the 5 nanometer chip.
It is.
So when you think about that, it's like, you know, honestly, if I'm a TSM investor, I'm licking my chops right now. And here's the other reason why I'm licking my chops, and like just satisfaction and also and hunger. Because I'm also getting money from Intel, because Intel is also paying us to help them in their process, since they couldn't keep up with AMD or an NVIDIA. But
And there we have it, the first shade of Hot Take Thursday, coming in at 5:33 p.m. Pacific Standard Time.
So, I mean, when we put it into perspective, I mean, I would say this for all the cousins out there, here's some homework. It'd be funny to see, it would be funny to find out what is it that TSM had to say about Intel when it came to like the shade being thrown across the room. And then somebody responded in kind. It'd be very interesting to see exactly how TSM exactly, you know what?
Shout out to T-Wo for
that shade in the tea room, y'all.
I had to switch shade. I had to switch it up on them. It'd be funny to see how TSM actually, how they feel about their customers.
Somebody find that tea. You will not find it in the shade room. You gotta look other places, y'all. All right, so coming up, we got okay, so Nike was in the news. Their stock is kind of going down a bit.
Yes.
But I guess, well, this not really, they just said Nike pushback, but what are you seeing for Nike? I guess what are you seeing for Nike in the short term, but then also what are you seeing for Nike like in the long term, maybe around September-ish?
Well, let's turn to a chart, shall we?
Yes. Oh yeah, y'all, we are going over technicals. I want to look at AMD's chart too.
I know.
That's why when you brought up Nike, that's why I said, woof, because I went and looked. Actually, that looks good.
So, I mean,
Bye, y'all.
uh,
Let's
yeah,
look at it.
let's pull this up. All right, so I'm gonna just keep it for the lines. I know that Zay likes to look at he likes to look at the candles.
Oh, we going use the lines. I showed them the lines in the last thing. They like this a lot better.
Okay, so looking at where we sit today.
Wait, Mark, let them know what platform you're on.
Oh, so for those that don't know, I'm using TradingView.
It's free, y'all.
It's free. So you don't have to worry about and you get to do some pretty cool stuff, which you never know. All right. Anyway, so here is where we see Nike right now, kind of sitting at this line. And I honestly believe that this is pretty much the last line of defense, but it's interesting because as of today, we saw a lot of bullish activity on Nike, which we saw a lot of bullish volume. How do we know this? I mean, we saw a beautiful candle here. And so honestly, I think that where we could be seeing is that essentially there's a huge, somebody likes to talk about gaps. There's a huge gap to fill here. And then on top of that, there's a few other gaps along the way in the process. So honestly, I would say that this would be a pretty interesting buy here for Nike. But the thing is to be wary because we're in this zone here and it's got to hold support at this area. It's actually at the area where it's got to hold support. If not, it's going to come down to here, which is around the 120. But I don't see that happening for Nike. Honestly, I think that Nike is going to move with the rest of consumer discretionary in the sense of a recovery. And as recovery gets better and as inventory gets better, because of course there's a lot of short supply across the board, I think that honestly there's brighter skies ahead for Nike.
Someone's asking about oh, this is Uncle Charles. He says the fear and greed index and normally what happens from April to June. So any trends that stand out to you from April through June?
Well, if we go back in time and look at Nike, I mean, if you look at here back this is during, of course, the pandemic. So I like to skip the pandemic, honestly, and go back a year before that. And interesting thing, you start to see some of the same activity, but then again, we actually had some falling activity here at Nike. I would say it'd be interesting to find out what took place. We clearly saw that their earnings, they did not beat on that. But then it's interesting because right after that, it's like the stock went for a very good run. But then, of course, around April, it definitely came back down. But then when we look at it in perspective, we were right back up there in pretty much the beginning of July. So it's kind of had quite the tumultuous time frame across the board. And I think its best time is pretty much around the holiday season. If this were me, I'd be looking at it around the holiday season.
And then in general, because I believe Uncle Charles' question was more so related to what happens to the fear and greed index between April and June.
Oh, I mean, yeah, it's pretty much we're leading all the way up to the greed part as it pertains to the fear and greed index because of the fact that the market becomes way more bullish at that point in time. So essentially, yeah, you're definitely going to start seeing a lot of greed start to go forth.
Okay, and then let's see. Oh, here's a question. Is a complete shakeup of half of the S&P 500 coming in the next 5 years? What say you?
Like, for example, the companies that currently exist? Mm-hmm. Yes, absolutely yes. And I'm here for it. Mm-hmm. I think that you have a lot of companies that are starting to become even more relevant, more and more. It's kind of interesting because I think the company that Tesla had replaced on the S&P 500 was I don't think anybody knew the name of the company that it replaced. And I think that there's a ton of other companies that sit there in the S&P 500 that nobody knows about or even cares about. And honestly, it's like when you think about it, when we look at index funds, their customers want to be in those dope names, though that they want to be in the S&P 500 index because they believe that it's the best of the best. Well, if the S&P 500 has to be the best of the best, then it has to get those companies in which that are literally either stepping into their prime or they're now in their prime and they're looking to ultimately dominate and rewrite industries. So yeah, I think that over the next 5 years, you're definitely going to start seeing more of a shakeup. And I think that I kind of joke at it. I joke at it in jest, but there's definitely always there's always some truth to a joke. And so to perspective to say, if Etsy can make it to the S&P 500, then what else can?
Okay. Let's take it a little more global here. Ooh. Here's the question.
Are we talking ships? Okay, no.
If the $9.5 billion loss per day with the Suez Canal situation will impact the market and speed inflation, we're talking about semiconductor supplies, all that.
So yeah, so I mean, for those that weren't that haven't like heard of the story, so this is like, you know, a lot of product or a lot of, you know, goods are still shipped overseas. So there's nothing wrong with that. It's just more so in the sense that what you have right now is you have somewhat of a delay. And this delay is ultimately causing a massive impact on import and export, AKA GDP. I think it's about 9.5 to 10%. So, and that's part of the world's GDP because of the fact that you have ships that are trying to come out and then ships that are trying to come in. And then on top of that, you have this large 200,000 ton ship that's just sitting there, just blocking from both sides. So that can have massive impacts as it pertains to like the supply of things at stores or, you know, for example, shipments and stuff like that. Now, of course, people are saying that, okay, hey, you can go around, but then that takes you 30 days out of, you know, your process of getting products and goods imported and exported. So this is a major line for anybody that doesn't know. The Suez Canal is just a long strip that goes from like, you know, pretty much it's, you know, coming out of, I think it's Egypt, and which that, you know, hey, that we see a lot of product move from one side of the world and it's going out to the other side of the world from east to west. So I think that, you know, ultimately in the end, it's going to be a small blip if they can get it done within about a week. If it goes for weeks, then this can cause some serious issues. But then, of course, there'll be a lot of pent up demand there. I mean, I think retailers know that. But then that can also help in driving up some inflationary costs because as demand goes up, but supply is low, then that also drives up price. So we could be seeing that as a short-term effect, which can sometimes impact some companies. But then on the other side, it could also be a good thing because of the fact that you have all this pent-up demand. So you know that you can have very, very strong guidance moving forward. So, I mean, like, I guess the best way to look at it, if we're looking at it from a semiconductor standpoint, we can look at even your companies like AMD, in which that if you look at AMD, if you go to any time when they release a product, they're sold out within 5 minutes globally. Mm-hmm. And the reason why is because of the fact that inventory is low. Now, this could have an impact on more so not the semiconductor space because they're very efficient, but it'll have somewhat of an impact. But I think that more so this can have a huge impact on like auto, like a lot of those auto parts, like the body parts of a vehicle. Also, like, for example, shoes, clothing, all those types of goods that can have a massive impact. So I would be on the lookout there.
So we have some Tesla stuff we have to get into, but before we get into that, can we take the time to look at the AMD chart since you just mentioned it?
Oh, but of course.
Then we'll get into Tesla.
You know, I'm here for it. So, all right. So here's looking at AMD. Now we're kind of seeing some of that same activity take place. Like if you kind of run a comparison from.
Wait, can we get lines?
Sure. Let's look at lines. Okay, is that better?
Yeah.
Okay, so if we look at that and then we compare it against the S&P 500 or the NASDAQ, you know, we put it really into perspective here. I mean, it's really not that far off as it pertains to where we are with AMD and the movement of the NASDAQ. And the reason why I say it's not that far off is because of the fact that, again, you know, AMD has taken quite the nasty dip. And so if you want to know like exactly how far the stock has dropped from its, you know, really its highs were here earlier in December and also in January, so January 11th. So if I draw this line all the way down to where we are today, that's about a 24% drop. So a lot of folks have been feeling that pressure, but at the same token, you know, what gives a person solace is here we can look back as it pertains to September. And this is just during a correction period for AMD during the September, and coming all the way down to these lows back here, where we're not that far away from those lows where we once tested. Sorry, my indicator is a little off. So then that's about almost 19%. So 18.99%. We're just going to round that up to 19% just for giggles. So really, I say 19. Yeah, 19%. So if we really put it into perspective, you know, AMD had its drop all the way down here, and then it came back up. So I'll delete this so that way I can show people kind of like the history from the top. So then we came back down again. That's 13%. I'll delete that. But then when we look at, you know, again, the upside, that's about pretty much 24%. And that's from, I'll draw out the info line from here, from the baseline all the way to, say, for example, from November till about, I think that's the height. I'll just take the height here. So that's 70 days here, and then that's 43 days here. Now, to put it into perspective for everybody else, that's from where we were here in February, which really where a lot of folks started to feel the pressure. That's from here to here. That's 41 days. So I'm trying not to give up too much magic here. So I'm gonna.
Woo, that was beautiful, man. That was like.
I'm gonna put something on the agenda before we close out. I mean, we're not done yet, but I'm really mindful of the time.
Yeah.
So someone wants to, well, we'll get into Tesla. I think we'll get into Tesla last because there was a lot with Tesla. But someone would like to know, put strategies to weather red days in tech.
Well, I mean, and feel free, Zay, if you want to drop in on this one, especially using your technical analysis. Actually, you know what? Zay, go ahead. You start up.
So we actually talked about this earlier. So and shout out to TiVo because it was us three who we were having a conversation. But I'm gonna start off with number one. If you have a focused portfolio, it's gonna be easier to hedge, right? So the second way, and then to add on to that, how can you hedge against tech or the NASDAQ? You can just use the QQQs, and hedging with a index or like basically like an index, or I guess what else would you call it, Mark? It's not an index, kind of like, you know, just your standard
exchange. You can look at it.
Yeah, your exchange, right?
Your exchanges.
So if you just use that, honestly, that's a great way for you to hedge. And you know, if you don't want to hedge against, you know, certain positions, you could just hedge against the entire NASDAQ. Because if you see, okay, hey, the whole exchange is going down because some companies are falling heavier and harder and they're dragging it down, that's an easy way to hedge. So for me, if I'm going to look to hedge against tech, I'll just use like the QQQs, and you can buy puts on that. And then basically you can hedge against the NASDAQ that way.
All right, there you have it. All right, let's get into Intel. I mean, why did I say that? Why did I say that? Let's get into Tesla. Oh my, what is going on?
Jolene, is there something that you would like to tell us?
No, not at all. All right, so we have NIO needing Tesla to buy equipment to keep them afloat in 2019. Let's talk.
I got 31 million problems. I got 31 million problems, but Tesla ain't one, right? So yeah, about NIO having to sell a portion, I think it was some equipment in order for it to stay afloat, and Tesla bought it for 31 million.
Mm-hmm.
And yet, you know, it's kind of like a two-edge, because like at the same token, Tesla bought that, and I'm probably sure they got that at a discounted steal. And then from there, that helped Tesla be able to significantly scale a lot faster. Shout out to Prentice for being able to make one of those valid points, where it allowed them to scale and to be it allowed them to move their timeline up. So this is kind of like, you know, hey, we keep you afloat, we keep you alive, and yet at the same token, we can also scale faster. So I'm here for it.
Win-win.
But should I also talk about something else about Tesla? Are we talking anything else about Tesla?
Well, yeah, because we talked earlier, I brought up the charging stations. And I don't know if you really want to talk about Elon's tweet.
You tweeted again?
I try not to pay attention. I try not to pay attention to Elon's tweet unless he says that he's coming to the Come Up series.
Right. But I did think something was funny, and it was just like, calm down, Elon. He tweeted about like, okay, if there's ever any, scandal about me, call it elongate.
Oh yeah.
I was like, dude, can you get back to work? What you doing, brother?
You see, this is what happens. This is what happens when you give Elon a phone at lunch hour.
Yeah.
No, but I was gonna say, like, one of the interesting things for the cousins to pay attention to, if you haven't known this, that Bitcoin and buying a Tesla with Bitcoin. We could probably go back and check the tapes and check the tail of the tape, but it's definitely there. But it's interesting because of the fact that if you notice, now they're actually giving you timelines from a week all the way up till 10 or 11 weeks out to purchase your Tesla. And that lets you know exactly how much pre-orders that have now taken place just through cryptocurrency alone. There's a huge market out there that actually wants to utilize their cryptocurrency without having to pay capital gains tax. This is a great way to do it. So I wouldn't be surprised. And honestly, if China wanted to actually do robo taxis, then they really could do it by leveraging the amount of cryptocurrency and Bitcoin that they have to literally just make significant purchases. But that's a whole nother situation.
Hilarious. Talking about the cousins in the comments. Okay, so we got 8 minutes left. And
today was fun. Today was so much fun. But you know what?
Are you gonna do the?
I feel like we need to give them, in the words of Steve Jobs, one more thing.
I'm like, no, I thought you forgot.
Mark, what was this?
Yeah.
Hilarious. Okay.
All right. So I hinted, I think I hinted last week or sometime this week. The days all tend to run together a little bit on me.
Especially when you go 3 times a week. Good Lord.
Girl. So interesting thing, I started like doing some wonderful magic, and for anybody that knows me, I like magic to a certain degree. So I felt like it was time for me to show you all some magic. So just for the sake of time, because I know that I don't have that much time, but I wanted to show you all some magic here. So of course, what I did was, here's some simple stuff, right? We drew a trend line from one top to the next top, of the chart. Okay, great. Now, if you want to make it simpler, we'll just use lines to keep it simple. Now, here from, say, for example, where we were at, say, for example, such high. Let me go ahead and adjust it because something's going on with this chart. So essentially,
what are we looking at? I'm sorry, I didn't catch that.
You're looking at the NASDAQ. You're looking at the NASDAQ composite. So essentially from when they had their recent drops. Yeah, so it's completely thrown off my chart, but that's okay. So pretty much we had a 7.7% drop back in October to pretty much the end of October. And then of course we saw that election rally, and that was about 7.7%. Okay, so as I move forward on things, I'll just adjust the chart. So, and then on top of that, I drew another trend line, which if you notice here during this period of time, if you notice, we saw some significant consolidation within, say, for example, such charts, which allows us to see that, okay, hey, these deep cuts weren't as deep. They started becoming less and less deep on the NASDAQ composite. And that's pretty dope. So we're going to have to definitely adjust here because TradingView is definitely being a hater today. So, but one thing I want everybody to pay attention to is let's make some adjustments. I'm going to delete this since we've already gotten past our trend lines. And then I'm going to come down to, I'm going to have to come back to our candles, our beloved candles. And I'm going to take it from here to here and from here to about here. So this is about the 122 days from what they say. And this is about 122 days as well. So both of these are 122 days. So this is from October 30th all the way to the top of March 1st. So really like that last line of defense. And so, of course, we were at the top here at, February 16th. So, and then we have here where we're January 4th, which was the first day of trading in the market. And that's another 122 days from, if we draw it all the way out to like May 3rd, right? So to keep it simple. Now, of course, the reason why my charting is a little thrown off here is because of the fact that, hey, I guess when you move from one side to the other, it automatically adjusts. So give me a second to readjust that. And I got that adjusted for everybody. So boom, there we go. All right, so here's the magic though, because if we draw on the magic from, say, for example, from the top of February 16th to where we came down to, which is really the support level in which that we're going to be looking to fight for, that's going to be about 7.5%. So if we look at it, 7.5%. So what I did was I just pretty much copied this line, which takes me all the way out here from January 4th to really May 3rd, which is again that 119 days, give or take. If I just kind of like move this over, then that puts us at 119 days from November 2nd. So pretty much the last day of the correction, and then we moved on. So pretty much if I come here, which is the first day of trading, all the way to May 3rd, that's 119 days as well. And then on top of that, if I take it from where we currently exist, where this line of defense is, which is around 1,300 and 107. So when we reach this point, then essentially this is an area where there's strong, significant support for us to run up. And if you put it from the same percentage, then it brings you back to the same line in which that we were, which is at the top of the market, which is about 7.6% in the NASDAQ. Now, of course, here's how I did it. I drew from the bottom all the way to the top, and then I'm going to do the same thing, which is saying this is where we are starting at the bottom from January 4th, and then essentially we're going to say from here to May 3rd of this year of 2021 that we should be back at the top of the NASDAQ.
So for those of y'all who need a recap,
because I kind of slightly showed a little bit, like when I showed the AMD chart where that was 43 days that it took for it to drop and go through correction. And then I showed another one where it ran up over, say, for example, the same period of time in, I guess, 43 days. And then if we looked at, say, for example, where it came from February 16th all the way down to the bottom for AMD, that's 41 days. So you can look at the same thing and see that, okay, hey, from November 2nd to, say, for example, last line of defense here, that's 119 days. From January 4th to May 3rd, that's going to be 119 days. And essentially from top to bottom, or to where this retest level is, that puts you at 7.6. So if we look at it into perspective, and if you want me to, I can even let's play some more, even further magic. I'll play this all the way down here from the bottom, which is at 12.62%. And then I will adjust this also and say, okay, hey, the last level in which that we were at before everything started to replay also puts us at a 12.63% as well.
So what y'all are seeing you're basically seeing a repeat, like a pattern. So in all the examples, in the AMD example, that range for recovery was 41 to 43 days. And then you're looking at the NASDAQ and it's the same thing. It's like there was this dip. And so if you take the trend line from the last day of the correction, and he took that line all the way up to the first day of the year, and then another that was 119 days, and then from that day all the way to you said March 1st or May,
May 3rd.
That was another 120 days or 119 days, and you're seeing the same percentages again. So you see that triangle that's running up, he's basically showing you support for a potential run up. So I know y'all were talking in the comments like, oh, give us some hope. You just, at this rate, you just look at the charts and blow up Zays and ask them questions.
Hey, I saw you looking for the fib. It's on the left side too, Mark.
Oh, the
Fibonacci. You wanted to use the tool. I saw you. Yeah, it's on the left side.
I had to like literally add it in for some reason. Let me go ahead and I did the Fibonacci level, so I will go ahead and add it in.
Ooh, we have a minute, but I forgot there was this question that needs to get answered. Okay, here's the question for the cousin. How do you think market will play out or be affected if Biden successfully raises the capital gains tax effective 2022, 2023?
Say that one more time.
Yes. How do you think the market will play out or be affected if Biden successfully raises the capital gains tax?
I mean, in the grand scheme of things, you'll probably just see people hold it for a little bit longer. I mean, honestly, in the grand scheme of things, it's not going to be that big of a deal. It's not.
All right. Well, someone was asking, I just saw it. Dang, these things go by so fast. Someone's asking, in other words, should we have followed the pattern and bought in now?
Well, I mean,
if you saw that Fibonacci,
yeah.
I mean,
you gotta ask yourself, time in the market or time in the market.
You want to take it, Zay? You want to take it?
No, I was just going to say, like we talked about it, right? It's like timing the market versus time in the market.
Right.
I think it depends on the position, how long you're going to hold, it for. I mean, because TA can also be wrong sometimes.
Yep.
And if you think you're going to time the bottom, just when you think you got that pattern figured out, it will switch on you real quick.
TA
is technical analysis for new cousins that
might. I'm sorry.
Yeah. Now the interesting part is, like, we came all the way down here to the very, very bottom of the Fibonacci. Mm-hmm. And then essentially here's where we currently sit now as it pertains to where that bottom level was. So again, where you see that line where I drew here at the 1301, imagine that, puts us at the 0.618. Which is really around the time where you start to really find that level of support. And then on top of that, we go to the next level, which is where you're going to find some significant resistance here at the 0.5. Once you break past the 0.5, then you go up to the 0.38. And once you break past 0.38, it's breakout time. So
good night.
Just remember what I just said here, because ultimately at this point in time, it can either retest back down to this level, or essentially it's going to find support between this level and this level. So Friday is going to be very, very telling. Tomorrow is going to be very, very telling of where the market wants to go. Now, of course, there could be other reasons for why the market sells off. But if you're thinking about it from a purely technical analysis standpoint, then this is pretty much the time where it's kind of like put up or shut up time. And that's where the market's going to show you. But don't always expect for it to always happen in just one day.
All right. So we are 3 minutes over time. But that's okay.
Sorry.
That's okay. It was worth it to see the trend lines and the patterns and the magic.
Yeah, I mean, it's kind of interesting because, like, the reason why I said that I wanted to show everybody that magic trick is, and you can go draw it across any chart and just use the same model in which that we use. And you'll find that essentially that you'll see similarities and you can start to find the patterns. And then when you start to find the patterns, the even funnier thing is you start to see where the buyers actually step in and where they find it really, truly attractive. So have fun, y'all. I hope you guys enjoyed this magic trick, because it should be a doozy.
Oh, they're going to have fun.
Yeah. Just remember, if you ever need help in understanding corrections, just remember this. Go back and watch the under 60-second video about corrections that we talked about, because I actually tell you exactly how long corrections typically take place. And it seems like this one's ready to come up out of the oven.
Ding, ding, ding. All right.
Game, series, match.
Speaking of the oven, y'all, I am hungry. Okay.
Shout outs to my guy Aaron back here. A lot of folks feel like this is Minty Aaron. Like, he's over here, like, literally throwing up, I guess, his fists in, solidarity. But apparently he's very, very hungry. But he was going to get food. But I'm glad that he stuck it out with me to, stay here and starve with me to go get it instead of going.
So sweet.
Hey, that's a good guy right there.
That is so sweet. You know what? Aaron has been pretty helpful over these last few days.
Yeah. Okay.
He has been.
Okay. He's learning, and so don't sleep. I mean, he's learning. All right, y'all ready to get up out of here?
Yes, I'm hungry and I need to figure out my dinner life.
Yes, me too. Zay, thank you so much for stopping by. You're welcome at any point in time. And if you haven't checked out his channel, please go check it out. I think it's First Gen Wealth.
It is. Yes.
So
Appreciate you.
definitely got to check it out. If you definitely want to strengthen your technical analysis, definitely utilize this, brother, because Cousins is a network. So essentially you got myself, you got Jolene, you got Q, you got TiVo, you got all of us, but then at the same token, you got technical analysis and Zay and many others. So check his channel out. You can also find him on Instagram at First Gen Wealth Building. I think it's the same thing on your Twitter account.
Yep.
So
yes, sir. Twitter, we have a lot of fun, man. Twitter, we have a lot of fun.
Yes, and more fun is coming.
Twitter.
Jolene, any last words for us?
No, y'all, just I don't even know what I want to say because I'm hungry. So the words they're just really not coming except for I'm hungry. But also I will say this, y'all. This week was a lot to digest. We don't normally go on 3 times a week.
No, we do not.
For a very good reason, because Wednesday is a recovery day for me. It's also a film day for me. And Mark as well. Well, it's a recovery day for Mark. And so for us to come on a Wednesday, just to get those questions answered, about the walkaway, I thought it was great. And I'm glad that we did it. However, those 3 times a week will be rare. So treasure them. Okay, go back and watch those videos. But it was a lot of fun. It was a lot of fun. But we are all about, when you're doing this kind of work, it is really, your self-care has to be up here. Okay, like this skin doesn't glow on its own. Okay, like you gotta drink this water. Look at Mark. Look at that skin over there. You know what I'm saying? So we definitely need to rest. That means y'all need to also invest in your self-care. And I'm not talking about body care of the body. I'm talking about care of the self, the spirit, y'all. So do what you need to do to get that in order. And that's all I gotta say. We about to be
got any last words for us?
I think like we talked about last time, patience, we're gonna be all right, y'all. That's it.
There you have it. All right, y'all. Until next time, I'm Mark Monroe.
Oh, my bad. I'm Zay.
I was gonna say a little rhyme, but I'm gonna keep it simple because I'm so hungry. And I'm Jolene GC in the place to be. Bye.
And this was Hot Take Thursday. We will see y'all next week on Tuesday. Have a good weekend, and you never know.